The stock market has been ripping this week and today. Bitcoin, not so much. We're going to jump in and take a look at why and what is going on. Currently, about an hour, 50 minutes left to close. Market's up about, the Dow's up about 2.1, S&P up 1.5, NASDAQ up 1%. As we know, the AI stocks have been leading the charge. Now the rally is spreading out a little bit more into some other stocks. All the while, the debt ceiling resolution has been resolved, passed in the House, passed in the Senate. And the narrative out there for investors is that the Fed is going to pause at the next meeting. Even though we had some hot job prints come out, we have some strong economic data coming out. The economy remains robust. The labor market remains strong. Unemployment rate ticked down a little bit. The new jobs ticked up a little bit that were created. The JOLTS came in pretty hot. The next thing we're going to be looking for and looking at before the Fed meets is CPI. So the narrative right now, because of Fed speakers that came out last week, was that they were indicating a pause is likely what they're going to do at this meeting. Doesn't mean they're going to not hike at the next meeting or stop. It just means that they're thinking about a pause or skipping the hike. So now we've got the pause versus skip debate going on. Higher for longer is obviously on the table, but why is the market so enthusiastic about all this? So a couple of reasons. One, obviously the debt ceiling, that was a big issue. So that being resolved obviously gave the markets a lot of momentum. With the markets thinking that the Fed originally was going to hike, those chances now have reversed. So the market's pricing in a pause. And then ultimately what a lot of investors and analysts are looking at and economists are that the economy is so strong that we're going to avoid any kind of a recession, any kind of a hard landing, things like that. So the talk is the most anticipated recession of all time may not even happen. But the caveat, the elephant in the room, the big thing that's still lurking out there is the inflation situation. So if inflation doesn't come down, if the consumer continues to spend and remain strong, that's going to be a problem. And right now, where inflation is in that 4 to 5% range is going to be very difficult to get any lower than that. So without doing a lot more tightening, I don't think the Fed's going to be able to affect inflation because the consumer is still pretty strong with all the refinancing that went on the last couple of years with houses, commercial properties, with low interest rates. A lot of equity was pulled out to sustain purchasing power. A lot of people are making a lot of money. There's a lot of jobs that were just added. So there's a lot of spending power out there. And this time of year, people are going to take their vacations, regardless of what's going on in the economy. Even in 2009, when we were having economic Armageddon, people still took their vacations. So we're going to see a lot of strength in the economy through the summer. And with inflation, that keeps top line earnings up, top line sales up, which keeps earnings up, which keeps the markets strong. So very interesting times. And as we said, Bitcoin's just kind of rolling along here, not really participating in the rally. It's up a little bit today, and probably pretty relative to what the markets are. 2%, 2.7. That's not exciting for the Bitcoin market. We like to see these kind of moves right here, 10, 20% in Bitcoin. 1 or 2% doesn't get this market excited. That's a 50% move right there. This last move here, let's see what this was. A couple of weeks ago, that was a 10% move. So these are the types of moves we like to see for Bitcoin back to the top of the range. And Bitcoin may very well follow suit over the weekend after the markets close. We might see, Bitcoin sometimes lags traditional markets. Sometimes it leads traditional markets. It's capital flow in and out, and it's all about liquidity. And there's still a lot of liquidity out there sloshing around. That's what's keeping the markets going. This is the Dow Jones right here. Just about back to the range, the last lower high right in this area, somewhat testing that. NASDAQ, let's see where the NASDAQ is, if it has breached the 618, which I'm sure it has. Let's see where we're at now on the NASDAQ. So as it stands right now, NASDAQ has punched through the 618 where it initially felt some rejection and now headed to the 702. Will it get there? We'll have to see, but that's the big testing ground, the 782, then obviously the 786. So Fibonacci retracement levels, the S&P back at about probably the 50% level. Let's see what that looks like on the S&P. That is right at 618. So the S&P is approaching the 618. We'll see if it can punch through here over the next few days. As long as we still have, strength in the economy and positive news, there's the Qs on the run. The Russell kind of hanging out. So this is the breadth issue that a lot of people are talking about. But here's one thing to look at: the VIX. So when the VIX is low, look out below. When the VIX is high, time to buy. The VIX is at 14. The last time we saw the VIX at that level was back around 2021 at the peaks. And then obviously, in that 2021 timeframe, and then you go back a little bit lower in 2020, probably, right around that February, March of 2020. The VIX was around that 13 to 14 level. And then when you get back into like 2009 timeframes, you can see the VIX wasn't even that low in 2009. It was around, it was around the 16 area before the big spike in the 2009 crash. So it's an interesting level for the VIX. That means people are aggressive with the market. Not, this is the fear and greed index, volatility index for the market, measuring fear. Not a lot of fear in the market right now. The dollar having a little bit of a, kind of a consolidation area right here, continuing its march towards that 105 area. The 2-year catching a pop, 10-year catching a pop, kind of hanging out in that 3.5 to 3.8 area, waiting to see if it's going to recheck the 4% as we go along here. Oil is the big story of the day. OPEC meeting over the weekend. They do not like where oil prices are. They like to see oil around 80, 90 bucks a barrel. So expect some price or production cuts coming out of OPEC over the weekend. Here's the interesting one here. Gold is down while the markets are up. Again, the safety trade is off. The risk trade is back on right now, while the Fed continues, or the markets and economists and investors continue to assess and debate what the Fed is or is not going to do. Ethereum kind of hanging out sideways to up consolidation. Bitcoin sideways to up consolidation. And based on the cycles of Bitcoin, and if you look back at the historical, levels of Bitcoin and price action, Bitcoin always consolidates into the halving and then takes off and runs after the halving. We showed that where the halvings were. We're about a year out from the halving right now. So Bitcoin could reach back down, potentially test this 20,000 level, maybe even the 15,000 level. But based on the market, the way things are going right now, the economy, if we avoid recession, if we avoid a hard landing, and if nothing major happens in the economy, then the low, this could be the low for this cycle, and Bitcoin will continue to consolidate into the halving. Generally, what happens is Bitcoin takes off after the halving into the next bull market, like we've seen the last 4 cycles. And the reason is because the supply of Bitcoin that can be mined as a reward to the miners for maintaining and validating the network gets cut in half. So therefore, that creates scarcity, which if the demand is the same and the pricing continues to go up, that obviously should lead to a price increase. If demand is still out there and the supply is cut in half, that means there'll be more, same demand or more demand potentially with less supply coming to the market. So the narrative is you better buy Bitcoin now before the supplies get cut in half again in the next 4 years, if you want to buy Bitcoin and hold it for the long term. So that's generally what happens to Bitcoin afterwards. The major concern as you get into these halvings is what happens to the miners when the supply gets cut in half and the price is not up enough, because right now they're already operating right around break even. That, depending on the miner, it could be 20 to 30,000, could be a little less, could be a little more depending on the mining operation, but they're running about break even right now. So they're having to sell a lot of their Bitcoin to keep operations going. When you add the cost of the facilities, the maintenance of the facilities, the employees, operating and maintaining the facilities, if you're a miner, institutional type miner versus individual, all the overhead costs, your financing costs for the equipment and for the property and leasing and whatever it is, there's a lot of expenses to mining Bitcoin. So if the amount of Bitcoin that you are currently earning as a miner gets cut in half, and the price is not going up, then that puts a lot of strain on the mining industry. So we'll have to see how that works out. But every past halving cycle, prices consolidated into it, maybe even recheck some of the lows. This obviously was the pandemic, but kind of consolidated, rose up, recheck some of those lows. And this, I think, was off to the next bull market back in 2020 before the pandemic hit. If the pandemic hadn't hit, hadn't have hit, this would have continued on to a bull market. And then, of course, what we don't know is how far would Bitcoin have gone without all the stimulus, the trillions of dollars pumped into the economy and the stimulus given to people to use for trading and things like that. How far would have things gone if it wasn't for that? And obviously some of the other things that were going on in crypto with leverage and just fraud and printing and all of the fake price action. So something to keep an eye on. But the entire crypto market is kind of in consolidation. Some of the altcoins are doing better than others, but everything right now is what looks like a traditional, typical consolidation after a bear market. And again, if the economy stays strong, if the markets stay strong, and we avoid recession, hard landings, things like that, the bottom of the markets could very well be in, and price could continue to kind of range and consolidate until the Fed is done. And again, I don't know that we can see a major bull market until the Fed is done for good. I think there's a lot of obviously repositioning, of capital, recycling of capital, things like that. But until the Fed's done and can stop hiking, and then even maybe start cutting rates, then the markets usually ultimately bottom after the Fed is done hiking, and after a recession. But we'll see. Right now, the question is there going to be a recession? Is the Fed going to pause or skip? And what will the consumer continue to look like as we move into the fall and the winter coming off of the summer of this year? So these are the things I'm looking at. See you on the next video.